Stocks are on track to notch weekly gains, driven by benign inflation data and lower yields. The S&P 500 is up approximately 1.5%, fueled by cooler-than-expected consumer price index and producer price index data, and a corresponding 20 basis point drop in both 10-year and 2-year Treasury yields. NVIDIA started trading on a 10-for-1 split-adjusted basis and is up around 8% for the week. Apple also hit fresh all-time highs following its Worldwide Developers Conference. Broadcom added to the tech momentum with a strong earnings report and announced its own 10-for-1 stock split. This week saw significant economic data releases. The NFIB Small Business Optimism Index hit a year-to-date high of 90.5. The Consumer Price Index, CPI, and Producer Price Index, PPI, both came in below expectations, contributing to a drop in bond yields. The Federal Reserve left the Fed funds rate unchanged, but reduced the forecast for rate cuts this year from 3 to 1. Weekly jobless claims reached a 9-month high, and the University of Michigan Consumer Sentiment Index fell to a 7-month low. Bond yields are at fresh 2-month lows, with the 10-year yield down to 4.22%. Heading into next week, stocks appear overbought, particularly in the technology sector. With major events like the NVIDIA split, Apple's WWDC, and the Federal Open Market Committee meeting behind us, there are few near-term catalysts to push stocks higher. Upcoming potential market movers include Micron's earnings on June 26th and the Personal Consumption Expenditures report on June 28th. While stocks hitting fresh all-time highs can be seen as bullish, the risk-reward ratio is skewing towards a pullback. Therefore, the forecast for next week is slightly bearish, with continued bullish momentum in tech as a potential challenge to this outlook.